Welcome to the Two Tokens podcast. During these episodes, we will invite guests onto our show and discuss everything token related. You can expect to hear about token business models, the underlying technology stack, token governance, but also more mainstream topics such as NFTs. Does this sound interesting to you? Then make sure you subscribe and keep listening. And now, on to the episode.
Welcome to the Two Tokens podcast. This is the third time we've actually run a series of masterclass now, and we're on the fifth session in May 2024. And I'm delighted to welcome Terry from Blue Tractor. You've got to tell us how you got that name. I think it's a great way you got it. And Graham from Archax. So welcome both of you. And we're going to spend the next sort of 10-15 minutes having a quick dive into tokenization and some of the challenges around and some of the opportunities. But before we get going, Graham, can I ask you to give us a quick background about what you've been doing in the UK and your plans here in Holland?
Yeah, sure, Johnny. Thanks for having me. So we are Archax in the UK. My background was in asset management, got interested in crypto in 2013, realised in 2017 that it was going to replace everything and decided that the world needed a credible digital exchange. So we went to the FCA and in 2020 became the UK's first regulated digital securities exchange, custodian and broker, and got the crypto asset registration as well, which means we can do things in crypto and securities. And we'll get into it more later of the trials and tribulations of that, I'm sure, but for 6 years we've been building that out, and we're now at the point where I think the world recognises that all assets are moving on chain. And part of why we're here is to meet people, be part of the ecosystem. We've got a regulatory application on here, and Two Tokens have kindly invited us to be part of their seminar today discussing tokenization. So looking forward to that.
Brilliant. But what are you actually doing here in Holland? Because you're also you've got a subsidiary in Luxembourg.
Yeah.
And you're looking to set up a subsidiary here in Holland as well.
Yeah, exactly. So we have full regulatory permissions in the UK, and obviously thanks to Brexit, we went from having permissions across 27 odd jurisdictions and overnight going back to one, and we decided we needed a European hub. We considered a few places, and Netherlands was the strongest, good regulation. A lot of people moved their MTFs and regulated licenses here post-Brexit. So we put a head of Europe in place, Harold, and we started to apply to be a broker and a custodian here. So we'll still have the UK as our exchange hub, but the idea is that this becomes our distribution centre for Europe.
Brilliant. Thanks very much. And Terry, welcome to Holland. Welcome to. We're sitting in CMS, obviously on the 15th floor. Great view across the city. But perhaps you can just give us a bit of background to yourself and the great name. I love the name you're calling Blue Tractor. What's all that about?
Well, thank you, Johnny. My background is quantitative asset management. Blue Tractor is a US domiciled company that offers a particular type of ETF structure to active portfolio managers. Our structure is different from the more well-known, fully transparent ETF that people are familiar with, in so much as it protects the manager's investment strategy and their trading strategy, which is all important to secure the fund against copycats and front running. The name Blue Tractor actually originated because I have a small farm in Essex in England, and it was while I was cutting my fields on my Blue Tractor that I came up with the ideas that underpin our structure. And talking to my colleague in New York in a little bar, Lily's Bar, just off of Times Square in New York, Simon said to me, there's only one name for this company. And I said, what's that? He said, Blue Tractor. So you may forget Terry and Simon, but you'll never forget the Blue Tractor name. And it's paid dividends for us. So we're pleased with it.
But Terry, when you Google Blue Tractor, you get everything apart from your company. It's really frustrating, but no, great. Okay, well, thank you, Rich. And my name's Johnny Fry. I actually work for a company called Team Blockchain, which has been in the space similar sort of time as Graham, and we actually met just before we set Archax up, so many moons ago, and really looking at who, how, where and why blockchain technology and digital assets are being used. I've been working with Alex Bausch and his team over here in Holland, and really more interested in the commercialization of the technology and tokenization. But Graham, can I ask you to give us a quick overview of what is tokenization and why bother? Why do we need it?
Sure. So I guess a lot of people think of it in different ways. My background is as an accountant, and it probably kind of helps fix the way that I think about things. I think of it as a ledger. I think about blockchain or DLT as a ledger, a record of ownership, and everything that we own in the world, whether it's shares, our car, our house, whatever it is, tends to have a record of ownership. And tokenization for me is just, where do you keep that record of ownership? So if it's a company's shares, you can keep it on a piece of paper, put it on a spreadsheet in a database, or you can have it on a blockchain or DLT. So tokenization is just putting those records of ownership onto a blockchain. And so, why does it matter? I think tokenization is a great word, but all we're really saying here is we're going to use the latest technology to track ownership, and the reason for that is all of the benefits that it brings. So in the same way, going from paper to Excel, you've suddenly got a much more efficient way of logging ownership. When you have a blockchain and you have it stored digitally, it enables you to be able to transact a lot faster on a blockchain. So we can see records of ownership. Let's say the three of us on this podcast, all own shares in Archax, and we wanted to transfer them between each other. The records of ownership can update real time when we perform the transaction without someone independently operating the records. And when you combine that with cash on chain as well, that's when it really starts to unlock value. So rather than just having, we transfer the shares to each other and I send you cash in the bank account, if you can have it so that a smart contract is written, so that when I send
hang on. What's the smart contract?
It's think of it as a program that runs within blockchain or DLT, which says, if this, then do that. So delivery versus payment.
So if I buy shares off you, I've got to give you cash, and you give me some of your shares in Archax.
Exactly. And we'll have a piece of code sitting in the middle between us that says, has Johnny sent his cash? Has Graham sent his shares? And the smart contract won't deliver to the other person until both of the criteria have been satisfied.
Got it.
And you think about every transaction in financial services, there's usually an intermediary that performs that function, and you can disintermediate a lot of what happens in the space. So I think delivery versus payment is one example. Payment of corporate actions is another. You think about all of the complexity around distributing dividends or fixed income payments to holders of securities out there. Usually you have to collect their fiat details, but you won't have to do this when you've got people's wallets. The same place they hold the shares would be the same place that you distribute the cash to. So having all of this together just is it's all about ownership on a blockchain, but the reason the ownership on a blockchain is important is because every asset can be on the same technology.
All right, so it seems to me, being very simplistic about it, we're going back in time. I'm going to sort of swap my basket of eels for a bushel of wheat. We happen to have met at the marketplace, but no one else involved. You've got something I want, I've got something you want, and we just do a swap. It seems that in the financial service sector, which I know both of us and Terry, you like myself, have been involved in this since the late 80s at least, we seem to have a whole layer of intermediaries and middlemen, and they're not there for fun. They're being set there hopefully to sort of control nefarious actors, control risk, but it seems to now become so complicated. And you're saying that tokenization will hopefully be able to disintermediate to some extent and make things a little bit faster then?
Yes, I think so. I know we want to focus on tokenization really here, but if we just think about what Bitcoin's trying to achieve, people are trying.
What's Bitcoin?
Bitcoin being
the
most famous crypto. It's hard in the developed world to understand, I think, the importance of that, but a lot of people like the idea that you have this value that you can hold and you can keep to yourself without using banks or relying on custodians, and you can freely transfer it to people for things. And people like the idea that you're not reliant on central counterparties. And if you flip over to the share ownership world, if I own shares in Vodafone, do I really hold shares in Vodafone? Kind of. I usually have a contractual right to my broker, who in turn has a custodian, who has a custodian registered at the Central Securities Depository, and. So you're like 6 chains away, and everyone's taking a few basis points of that fee. And as a retail consumer, most regulators talk about protecting the retail consumer, but the reality is the more unsophisticated you are, the further away you are from an efficient market. And so I think with tokenization, there's the potential that you can get rid of a lot of those intermediaries. You can buy direct from an exchange, you can transfer peer-to-peer, but kind of to your point, we've managed to create something hugely complex, and we need to we need to be careful when we're creating this new financial future on chain that we don't replicate a lot of the issues that have existed before.
Got it. And Terry, I know you obviously it's a US business, and people are often intrigued when I tell them Wall Street used to shut on a Wednesday because there was so much literally paper back in the sort of 70s where people were walking around with sort of sacks of wheelbarrows, and they would trade Monday, Tuesday, shut Wednesday, then trade Thursday, Friday. And they got the weekend to sort it all out, and that led to the establishment of the DTCC. And then, but America, in many ways, has led the process with a number of financial products. Arguably, the creation of ETFs is something which I know you've been heavily involved in. But I'm interested in your point because you've actually. Can you explain what you do for the ETF market and why that's potentially relevant for actively managed mutual funds that are looking at tokenizing or digitizing their funds?
Yeah, as I said in the intro, basically we have an ETF wrapper, as we term it, that provides protection for the manager's investment strategy and trading strategy. And you can bring that to the market in existing form, traditional finance, which if you think of an ETF share in its own right currently, gives you a representation of the underlying portfolio. So it's already tokenized in some respects because one ETF share gives you participation in that portfolio, no different to a token. So we're almost there. And obviously, if we can bring that to a mutual fund as well, that will bring intraday liquidity, lower trading costs, etc., etc. So we'd like to see the tokenization of mutual funds, because that will open up a whole new world for mutual fund investors. In terms of the differences between the US and the rest of the world, that really comes down to the creation redemption process that the US has in place as opposed to the rest of the world. The rest of the world really deals in cash. Creation redemption goes through cash.
I put money into your fund, and when I sell it, or the ETF, I get cash back out.
No. If you buy the ETF share, you receive an ETF share. When you sell the ETF share, you'll get cash back, as you say, and you'll pay capital gains on that. But an ETF in the States is highly a tax-efficient structure because of a mechanic within the structure called the creation redemption process. And that creation redemption process in the US enables the ETF itself to be highly tax efficient. The rest of the world has the creation redemption, but their creation redemption is through cash. And they're not as tax efficient as the US funds because of that, where the creation redemption is in securities, not cash. They can have cash, but it makes the fund less tax efficient. So one of the keys here in terms of tokenizing actively managed funds in the States as opposed to the rest of the world is the creation redemption process. Are the US funds going to lose that tax advantage because they have to revert to cash?
Got it. Okay.
So in the rest of the world, there's going to be no difference. It's all cash creation redemption. Nothing will change except the asset. The fund itself will be more ready available outside the home market. Because if you've got a US or say an Australian ETF, you're really only selling to the Australian domestic market. With tokenization 24/7, that becomes available to Africa and everybody else.
Okay.
That's one of the benefits of tokenizing an actively managed ETF.
Okay, so Graham, we've gone down, as I thought we would end up doing, going down the funds route, but obviously tokenization is applicable for all sorts of different asset classes. But a number of people often ask, well, okay, so sounds good, but when's it all going to happen? Well, we are to some extent, and you've already listed some funds that are effectively tokenized, and it seems to be the money market funds, which in the UK are quite small, about 50 billion. Over here in Europe, they're at 1.7 trillion. In the States, they're over $6 trillion in size. So globally, it's an asset class of $9 trillion, which is roughly 4 or 5 times the size of the crypto market, which I think it's interesting that we're using the technology behind cryptocurrencies, but actually that's where the similarities end, because what we're talking about is the ability to buy and sell, whether it's equities or private equity or a fund or real estate, 24/7, and potentially have it priced by independent market makers. So from your perspective, where do you see the market moving? We've seen one or two tokenized money market funds in Europe, UK, and in America, but you've not that long ago had quite a large asset manager, Aberdeen. No, not Aberdeen. They spell it really way. Aberdeen. It used to be Aberdeen Asset Management.
Yeah, exactly.
They took a stake in your business. What was the rationale behind that, would you say?
Yeah, I think your original point, and I guess my intro, is everything's moving on chain. I think for the first couple of years of Archax's existence, maybe people weren't so sure. I'm pretty sure that every financial institution out there knows this is happening now. And a few years ago, actually 2 years before they invested, we started speaking to Aberdeen, and they have the same vision as us. Not just that assets are moving on chain though, but also that a lot of operational processes can be made more efficient in pricing and administration. So, rather than try and do it themselves, their idea was to partner with Archax. And actually, one of the, to kind of link back to the tokenization, one of the things that they wanted to do was tokenize funds. Now, we've tokenized equities, gilts, and funds. And funds is an interesting use case. And most people, I think, start from the point of view, okay, let's tokenize a real estate fund because it's illiquid, and tokenization will help. And tokenization doesn't really create liquidity. Maybe it facilitates it. But people start there. But then they realize the complexities and some of the things Terry's trying to solve. If you tokenize a real estate fund, how do you create a market? How do you find a market maker? How do you hedge your risk? They're all really difficult. Money market funds become interesting for a few reasons. Firstly, they're easy to hedge. They're usually redeemable T0 or T1. They're all short dated. There's hardly any risk there. They price at 1. And I think the crypto community combined with the traditional community kind of looks at them and compares them to Tether or USDC Circle, and has been saying, okay, these things have got $100 billion. All of the returns are being kept by these stablecoin issuers, but actually tokenized money market funds can be used in exactly the same way as a stablecoin.
And they have a yield.
And they have a yield which the consumer can keep. The only downside of them really is the friction of doing AML KYC versus a stablecoin, which is more freely transferable. But the regulations are starting to address that now. So I think everyone suddenly realized actually money market funds, like you say, is a huge asset class globally. But even if you just look in crypto and you go, okay, the $100 billion in Tether, if I'm a hedge fund, why would I hold Tether if I can be getting 5.5%
from BlackRock,
for a BlackRock
or from
fund?
Aberdeen, or Fidelity,
exactly,
or Monday?
Yeah, so it's there's the use case, and to your point, we've got we're distributing now Aberdeen's products and BlackRock's products. They're both available on chain. We put them on Hedera, we can put them on others, but we've got a few other asset managers coming as well. So it's quite a popular area at the moment.
Brilliant. Okay, and Terry, we're seeing the mutual fund market looking at tokenization. Historically, you spent your life building quant models, and looking to actually have settlement, flash trading. Not that you got your flashes Mac on, but in terms of very very fast execution. And we see the regulators in a number of jurisdictions wanting to move to this delivery versus payment, or T0. Again, I'm sure you remember, you used to be able to buy in the account in the UK. So you could buy shares in, say, BP on a Monday, and you didn't have to pay for them for 10 working days later. So I suppose technically it was T10. But as we start to move towards T0 and delivery versus payment, it's going to be quite difficult for traditional systems to operate that quickly. Do you see the tokenization being able to help in that process?
Absolutely I do. The more you can take advantage of this technology called blockchain and all the efficiencies it brings to the party, the more we're going to be accept those efficiencies in our day-to-day dealings, and whether it's settlement, whatever, trading, blockchain technology, really does, push that forward. And I just think, that's the future. We get rid of these frictions make things much more efficient. And the way to do that is embrace this technology. Make it more collegiate with regulators and fund managers and custodians, etc., rather than adversary.
Yeah,
which some regulators...
And that goes back to what you were saying, Graham, in terms of, particularly for smaller retail investors, we seem to have lots and lots of other parties in the way of, I actually just want to hold some Vodafone shares, or I just want to hold some Apple shares, but actually it's quite difficult. It seems there's layers and layers of regulation that's been created, and ultimately that's layers of costs. So hopefully tokenization, whether it's a share, whether it's a fund, whether it's a debt instrument, can help strip that away. Well, look, I'm really pleased you both joined us. Looking forward to this afternoon, because you're both at Two Tokens Masterclass session, explaining a little bit more detail about some of the challenges and some of the opportunities around that. But meanwhile, just on behalf of Two Tokens, I want to thank you both for coming here today, and look forward to this afternoon's Masterclass.
Thanks, Johnny.
Thanks, Johnny.
Cheers.
That was it for today's podcast. Thank you for listening in, and please subscribe so you don't miss out on our upcoming episodes. If you want to get in touch with us, you can find our contact details at www.twotokens.org.